Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Wednesday, Fed Day, March 21st, 2018. We'll take a look at the markets here surging up. I actually called this move to the upside on Twitter today, and I want to show you why I knew the markets would rally on the Federal Reserve announcement, at least initially. Like, who knows what they do tomorrow, what the heck goes on later today, but the initial move up, not a surprise here. Let me show you why. Okay, so very simply, the first thing that alerted to me to a move up coming in on the markets per the Federal Reserve announcement at 2 p.m. Eastern time today was the IWM. So if you look at the IWM, the whole rest of the market's been flat, negative for part of the day as well. But look at the IWM right out of the gate today, and this is the Russell 2000, surging to the upside and really being up pretty spectacularly. I mean, this thing is right now up 1.2%, but even pre-Fed move, it was still up close to 1%, even before we heard from the Fed. And that's a bullish indicator for the markets. I look at the IWM or the Russell 2000 as a leading indicator. And it's a great leading indicator because basically the Russell is small caps. So if you get good price action to the upside on small caps, it's telling you that money is flowing into small cap stocks, and it's telling you people are in the risk on environment. And you have to understand that the big money, the institutions, they've already basically priced out what's going to happen with a 99.9% certainty what the Fed decision is going to be. So if they're buying small caps, folks, they're already banking on the markets going up. Okay, now if the markets, if the IWM was trading sharply lower today going into this announcement, guess what? You'd then be favoring a drop from the Federal Reserve. And this is a great indicator in the markets 24/7. So tomorrow, the next day, keep an eye on the IWM. It continues to be an amazing pre kind of telling indicator out there. The second thing I wanted to point out here on the spiders was how the chart behaved going into the Fed announcement. So basically, ever since Monday's ugly drop, right? Yesterday, we had a very range bound market. We were at a high pivot here, low pivot down here, and we just went kind of up and down throughout the course of the day. This put a range in the market going into the Fed decision today. Today we opened right here and we floated up and we came right back to that pivot high, and then there were buyers that stepped up. You can even see a little bit of a burst in volume here, pushing the market outside of the range, what we call a breakout. And that breakout, again, folks, is a beautiful indicator because what it tells you is that if the market's breaking out, it's not small money here, right? I mean, these are people that they literally have computer programs they built and cost them billions of dollars, these big institutions. So if they're pushing the S&P futures up, in this case the spiders, but that's run off the S&P futures, then you have to assume that the markets are getting ready to rally higher. What they're doing is accumulating, and that's what pushes the market to a breakout. Then look at the beautiful retrace here right back to that line. It holds going into the Fed decision, starts to move up, and then here's the big candle where you get the Fed decision, boom, to the upside, and we're continuing up to the upside here. So again, I mean, this is just two indicators that basically predicted the move in the market beautifully. And again, I was on top of it. You can go look at my tweets on Twitter. It basically dictates this exact outcome based on the charts. And again, you just have to look at the right things, and you can almost call any move in the market based off it. Again, if you can read the right signals, you can call the market beautifully off of big announcements. You know, it could be like a big announcement like GDP, or it could be the Federal Reserve announcement, or it could be a jobs number, non-farm payrolls. Bottom line is the charts usually give you the direction because let's be honest, it's not totally unknown out there. There are certain parties that are privy to information ahead of time. It gets out. Somehow it gets out, at least to the top big institutions out there, and they position themselves to maximize profits. So, anyways, we'll see what happens to the market later today. I will not guarantee that we don't see a reversal at some point because if yields start to creep up a little bit towards that 2.95% today, that was the previous pivot high, then the market's going to get skittish about yields going to 3%. So, please be aware that this was just an initial reaction move to the FOMC rate decision where they raised a quarter basis point, but they didn't say 4 rate hikes in 2018 this year. They said just 3. And then next year they upped their guidance in 2020. By the way, the fact that they upped their guidance in the next couple years, it is a little hawkish, but the market was really worried about 2019, and that's why initially at least we're seeing the relief with the markets popping to the upside. All right, this analysis, I mean, this is how we trade, folks. We do swing trades, we do options, we do day trades. come join us at inthemoneystocks.com. This is where you're going to make money. Take a look at our track record. It speaks for itself. This is probably one of the best day trading years I've ever seen, as well as swing trading and options years. I mean, things are just rocking and rolling because the volatility is back. And for average investors, volatility is bad. It scares them. They get out at the wrong points. For good swing traders who can read the charts, it's literally a windfall of massive profits. So you got to get over here in themoneystocks.com. Take the 7-day free trial to the research center. Get swing trades or take the options alerts, up to you. Or if you're a day trader or want to try day trading, get involved. Take the intraday stock chat 7-day free trial. Take care, folks.